Hello and welcome to Crux Investor. We caught up earlier today with Neil Warach, who is the VP at Step Gold. They talked to us as to why they missed their targets for last year, what they're going to do in terms of delivering their phase 2 operation and how they're going to fund it this year. And if you want our thoughts and opinions on the conversation, the company itself, and indeed Neil, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. There's commentary from experts from around the world on a variety of companies and commodities, including gold. We've got training courses to help you with your diligence process. We've got summaries of interviews. In fact, all of our interviews, just to save you some time because we know you're busy. And if you want to join a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment, free from judgment, trolling or abuse, join them at cruxinvestor.com/club. I think you'll like it. And we love your feedback too. So do give us a like, leave your comments below. We get back to everyone. And if you want to see precisely the topics discussed today, do take a look in the description below. And Neil, how are you, sir?
I'm good, thank you.
Good.
How are you?
Matt, yeah, all good here. Where in the world are you?
I'm in Toronto right now, safe and sound in the office. Still in a predicament here with the lockdown, but I could see the lights at the end of the tunnel here.
Good man. Getting on with the business of running the business. That's what we like. Hey, so we are going to hear your story today, Step Gold. We've not spoken before and not heard the company story before, so I'm looking forward to it. But we're just going to start off with a 1-minute overview for people new to the story, and then I'll pick it up with some questions from there.
Absolutely. So Step Gold listed on the main board of the TSX. We are a Mongolia-focused precious metals company. We brought production online for the first time in April 2020, so last year, just under a year ago. So we're now a new gold and silver producer that's producing from a heap leach phase 1, expanding into a phase 2 CIL plant and flotation circuit in short order, and lots of exploration potential on both of our licenses, which we'll get into, I'm sure, later.
Fantastic. And you've done that relatively quickly. I mean, when did you guys go public?
May 2018, we went public. Actually, the only mining main board IPO on the TSX for that year. So in a very tough time, we scrambled and got the capital for a Mongolia company, which was obviously wasn't easy either.
No. Well, I mean, to that point, not many Mongolian companies on the TSXV or anywhere, quite frankly, it seems. So that was and tough times, 2018, as you say. So, I mean, how much money did you raise then?
25 million Canadian.
Right. At what price?
At $2. So the $2 unit offering.
Right.
So it came with 234 warrants. So I guess for investors who are new to the story, they haven't really missed the boat because we raised the money 2.5 years ago at $2 when gold was $600, $700 less. We hadn't built a mine, so we had permitting, capex, finance, build risk, and roll around. Now we're a cash flowing company, and not much higher than our listing price. But that's okay because we have cash flow in our own cash now.
Right. Okay. I mean, yeah, I guess it's been a difficult period for people who kind of came in then because your company wasn't worth a whole bunch of beans then. But I guess the excitement was there. You are a producer now, so it's a case of playing catch up. Is that the idea? Exactly.
So you can play catch up, and you don't have to pay for it. Meaning we don't have to raise equity to get to a higher valuation. So it's a nice feeling to finally have, and we haven't had that since listing. To be honest, we started with cash. We had a fund who immediately had to start liquidating because of their own liquidity requirements, which, we're always playing catch up from day one, to be honest. In a very tough market with no support, we're trading down. Then you become an orphan when you're building a mine. No one cares about you. They say, show us you can build. And then they say, show us you can get the cyanide on site. And then they said, show us you can produce. Show us you can produce for 2 quarters, now 3 quarters, now 4 quarters. So we're playing catch up. It's okay because each quarter of production means we're generating cash flow, free cash flow, which means we're not at the mercy of the markets anymore.
Right.
That's a great feeling.
But it's not as much as you thought you'd do last year. You're obviously affected by something. Is it? And I guess what I want to know is it doing business in Mongolia is tough, or is it COVID related, or was it something under the ground that you weren't expecting? What happened?
I think it's a combination. I mean, we didn't start production until April of last year, which is at the height of COVID. Actually, that's one of the most toughest times to bring a mine online. In fact, we're still happy with the outcome because we still produced cash flow, and we did it. What's more importantly, with 100% Mongolian team. Because of COVID restrictions, there were no expats in the country. So I guess there was maybe some conservatism in the way we approached the startup and this ramp up because one of our key guys who have built 8 other heap leaches around the world and has experience in Mongolia, wasn't even in the country. So it's very difficult to go for it and be aggressive like we are without sometimes having that person in the country. But we managed, we think, good, fairly well, I'd say.
When you say you were conservative with the amount that you were able to produce, or you were conservative with what you were saying to the market? What do you mean?
Conservative with the amount we were able to produce. So we produced roughly, obviously the final numbers haven't come out, for the first 9 months during startup and ramp up and during COVID, I think we produced roughly about 35,000 ounces on the gold equivalent basis at a margin of about $1,000 an ounce. That's not a bad deal, to be honest. It's not like we've lost production or lost revenue. In a way, you kind of deferred it. And hopefully that deferral will equate to even a higher gold price, but we don't need it. So yeah, conservative on the production that we achieved last year. Our target is 50 to 60,000 ounces from this phase 1 mine. And, on 9 months, we produced 35,000 ounces. And it was a combination of being conservative on the ground. Then you have bottleneck issues that you can't foresee, like crushing, for example. So we actually brought a secondary crusher down to the pit, which helped remove the bottleneck in terms of the crushing and all that good stuff in the summer. So there's some growing pains that you can't foresee until you're actually in production.
Right. So can we pro rata that 35 for the fourth quarter and give us a view on what you're going to achieve for 2020? That'd be a fair thing to do.
So the 35 is the approximate estimate for all 3 quarters, so including Q4. So we started production in Q2, so Q2, Q3, and Q4 of last year.
Okay,
so you come out.
Okay, so you're 25,000 behind where you thought you'd end up for the reasons you've explained, but you feel that this year you're going to hit your 60,000 guidance.
Yeah, our guidance for this year is 50 to 60,000 ounces, and we're fairly comfortable with that, given the amount of material we have already stacked, ready to be processed. Our mining bottlenecks, in terms of crushing bottlenecks, are being addressed. So we're fairly comfortable. It's normal growing pains that you have to hit your stride, which we're almost there, I would say.
Okay, so you talked about, I think you were referring to Matthew Wood earlier. He's obviously not been in country, but he's operated in the country for a decade or so. What's he going to do for you this year? Why is it important to have him on the ground?
Well, to have Matt involved, obviously, he's been there for over a decade, very successfully has built and sold companies, has very strong relationships with the government, with the locals, the skilled labor force, and he's aggressive just like me. Our team is aggressive guys. Now that we've kind of checked the box on step 1, no pun intended, but phase 1. We know how to execute again on a gold mine and build one and produce. We can be much more aggressive with a stronger balance sheet and cash flow behind us. So he's gonna drive more of the growth on exploration. That's something that we haven't had a chance to focus on in the last 2 years because we've been building our first mine. We're there for a much bigger footprint, a much bigger mine to build in phase 2, as well as the potential for new discoveries in Mongolia. So he's going to spend a lot more time now with capital behind us, cash flow, to really ramp up exploration on both of our properties. Right.
Okay. I get the desire to kind of get into production quickly because it produces the cash flow, certainly in the environment that we saw last year for precious metals generally. But do you feel like you've kind of shortcut a few processes to be able to do that? And that explains some of the bottlenecking.
Yes, I think so. I mean, this phase 1 is it's almost like an agricultural type operation. So it's not complex like phase 2 or CIL plant and all this good stuff. So yes, but that expediting the phase 1 allowed us to control our own destiny for phase 2, which is the real project. Phase 1 is only a means to get to the much larger mine underneath. So, whether it produces 2 years or 4 years, that cash flow actually funds the growth and allows us not to be looking at the day-to-day stock price and be worried about when do we have to raise money and when's this overhang has to be removed. So it gives us more control for the growth of the company.
That's really interesting. I'm just trying to understand the mentality there. So you're saying, right, you're happy with some growing pains versus being in control. You got to weigh up, do we want to be in control of the cash flow versus have maybe some growing pains, which you've talked about, and that's fine. And those are two different styles of operating. And I'm not saying one's better than the other. It's just I want to understand that. So where are you in terms of studies for the next phase 2? So phase 1, you're in production. Great. This year, 50 to 60,000 ounces. heap leach, cheap, you're making margin, good. Phase two, is that going to require you to be a little bit more structured in the way that you do it? Because it's CIL, it's a bit more complicated.
Yeah, absolutely. And that's why we're doing a revised bankable feasibility study. It gives you the strength to go to the market as well as to build something. Now we bought this project and built it on an internal feasibility study from Centerra. So we were able to shortcut and just build the oxide mine because it wasn't a large capex requirement and do it. So phase two, yes. So over the last year we've commenced that bankable feasibility study. We've taken more samples from our resources. We've also doubled our resource, by the way, from over 1.2 million ounces to 2.45 million, which bulks up phase two. It makes phase two more of a reality. So we have additional sample work, we have new flow design, engineering work, all being completed. And in just a few months, by the end of Q2, we'll have that available, and so people can see how a more robust of a study we have to back up the expansion there.
Okay, and talk to me about the financing again. I get the money you raised 2 years ago, 2.5 years ago is one thing. How much money have you raised since then, and what other types of structures have you put in place to allow you to finance what it is that you're doing at the moment?
Sure. So after we raised the 25 million Canadian at listing, which was kind of about 18, 19 million US, there was still, I would say, a shortfall on construction. Construction ended up being between 20 to 25 million US, depending how you factor in the operations that came online while you're constructing. So we were mining while we were still constructing the phase one mine, and so I would say about a year and a half later, we raised some convertible debentures. So that was the way that we thought would be the easiest to bring in some capital that wouldn't be as restrictive, and so that was another circa 8 million US of financing. All of those convertible debentures have been converted into equity over the last 8 months and really had minimal impact on our stock. So there was no overhang because, again, we put in current investors into the convertible debenture. They always had the first right to participate. Given that we traded down from listing, there were obviously the guys who had the first right to come in, and they did. And then we brought in some Mongolian investors as well at the same time. So that was very useful. Helped us get into production. We raised a small amount of equity as well just before production, a couple $1 million, and then the government, the newly established sovereign fund of Mongolia, came in for 3 million US just over a year ago as kind of our last tranche of capital pre-production, 3 million US. So it was a great vote of confidence to get their first investment ever into a mining company into us. So that shows you the support we have in the country. I think we're doing things properly, clearly, to get their support. And so that got us into production. And then we started spinning off, well, first of all, paying off a lot of our deferred liabilities and payables that we, getting into production. And then Eric Sprott was our last tranche of capital that came in. And Eric Sprott came in last summer after we started production. So once we announced commercial production, Eric came in when we really didn't need the money per se, because we had our own cash and on our balance sheet and cash flow. However, his capital provided new eyeballs on the story, further endorsement for Mongolia, our team, and our assets and the growth potential. And more importantly, it bolstered the balance sheet to allow us to be bulletproof. That if there were some operational hiccups, delays from July till now, we didn't have to go to the market to raise any capital, and obviously we haven't. And so our balance sheet has strengthened, and I guess we'll never go back to where we were in the last 2.5 years, where we're struggling to get by. It's a nice feeling.
Yeah. And have you had to revert to any sort of royalty or streaming deals?
So we brought in a streaming deal at the beginning, right at the beginning. So Triple Flag Mining Finance have been our partner since 2017. So that, as a private company in 2017, before we listed, we acquired both of our assets. So we acquired this asset for 20 million US. So we bought it for 20 million US and built it for roughly 20 million US, and it actually generated about 25 million US of revenue in its first quarter. It's not a bad little structure there, I'd say. So Triple Flag came in for both equity and stream. 28 million US of a stream, and between themselves and Elliott Management out of New York, who are also their backers, they've put in 7 million of equity at $2. So that was also to align their interests as our partners, not just a streaming transaction, but they're also equity investors, and that bodes well for the market. But I think more importantly is the fact that they actually took on us as their partners. We were their second deal ever. Their first deal was 250 million US on a producing mine in South America with a major, and here they're doing a second deal, which is out of their wheelhouse. Their deal, they do 100 to 550 million dollar deals. That's their snack bracket, not 28 million US. So a great endorsement for them to put that time and money to back us earlier on, I would say.
Why did they do that?
I think they saw the opportunity to have a toehold with the right partners in Mongolia. This is obviously, Mongolia is relatively still underexplored in the precious metal space for sure. We think there's opportunities to build a much bigger company, and we obviously have done it before. Our team has done it before and have very strong relations in countries. So I guess maybe they wanted to pick a horse where they saw an opportunity to then put maybe $100 and a couple $100 million to work in the country later on. They're patient, so this was step one. I guess.
Okay. And so what are you going to be netting at like today's prices on gold production?
So our approximate all-in costs, I don't have the last quarter's all-in costs, are about $750 US all-in cost. So at today's pricing, we're netting just under $1,000 an ounce. So it's a high margin business, as you can imagine. And this is just phase one, the smaller production profile, that if we did nothing else, we can produce for the next 3 to 4 years. So that's the advantage we have this time around than phase one is we'll have this cash flow machine from surface that only goes down to 40 meters that can go for 2 years more until we bring phase two online, or it could go for 4 years more in case phase two does take longer through construction delays or procurement delays or whatever. You have a nice cash flow buffer from your own cash machine to weather that storm. So it's a high margin starter mine that roughly I think will be about $700 life of mine. So as we continue to optimize, we're still in startup ramp up first year. I think by Q2 of this year we'll kind of, like I said, hit our stride, and our all-in cost should be around $700 or maybe even sub $700.
Right.
Is our target.
And you're talking about CIL plant in there, so there's a bit more capex to come through. How do you finance that?
Yeah. So we've told the market that we're looking at about a target of 60 to 70% of debt for that phase two expansion. So I'm just going to throw out a conservative number here, 150 million US. If it's 150 million US to construct, then we will take on 90 million US of debt. It's a lot easier to get debt on favorable terms when you're already producing, you're already operating. So we'll be able to get debt on more favorable terms. So we don't need to go to the PE guys and get plus, the double digit. I think you're going to see single digit interest, plain vanilla type debt. And what we're trying to accomplish again is trying to get more support from within Mongolia. So the first place we start is in country and see what the commercial banks and the government want to provide. So the government has already given us a 10.5 million US tranche of what we call this lead order or tranche one for this debt. It's sponsored by the central bank, and that's 10.5 million US. So we're gonna try to get another 50 or 60 from within the country if possible, and the rest will come from the Asian banking community who have a lot of interest in Mongolia's in their own backyard.
Okay, and talk to me about the current shareholders, because they've been sitting in this for a while, two and a half years, and shares have barely moved, right? But you are in production, and you have been in production since last year. But again, the market doesn't seem to care, even in a positive gold environment. What's the problem? What are they struggling to understand about you guys?
Sure. So going to the shareholder base, I think we didn't have any additional institutions join the roster until Eric Sprott, who is an institution, came in last summer. That was great. And just recently we brought Fidelity Investments, who owned, I think, just under 5% of our company today. So I was able to arrange a block trade to get him in to a bigger position just a couple weeks ago from one of our other friendly investors who didn't need to be in the equity component. People can put that together who that is. It's very easy. So it was a nice friendly transaction. We were able to get a new institution in, and I think this year we'll start bringing more. But the problem has been in the last couple of years is people have only been looking at phase one. They've been fixated to saying that these guys are only a 3, 4, or 5 year heap leach operation at circa 60,000 ounces. How sexy is that as a producer? So they're not giving us any credit or opportunity for the exploration, which is massive in Mongolia, as we know. So not zero credit for that and zero credit for the phase two. Now we put out a resource report just a couple weeks ago that showed that those 1.2 million ounces is now 2.45 million ounces and still shallow at 400 meters. Now people are starting realizing that, okay, we have a real base, we have a real path to phase two, and that can keep growing. So I think now it's just an education process of getting that in front of people. But I think they're stuck in that short mind life without looking beyond. And so that's, I think, a key reason, as well as people not understanding Mongolia well. The amount of people, institutions included, who say no to Mongolia, and some of them not sure why. Are you comparing us to Oyu Tolgoi? Are you understanding that's a company specific issue, not a country specific issue? Clearly, we have the government support. They invested in our company, and they're giving us capital to grow. So I think that also is some of the noise around Mongolia on a project that is massive, too big to fail, but just creates some misconception.
Yeah, I think a lot of that's true. I mean, I think a lot of companies, the graphs, show them falling away for the last 3 months because, gold's come off, right? And you've kind of steady state, I suspect. So you're getting a little bit of credit.
Mm-hmm.
How long is it going to take for people to how long is it going to take for you to demonstrate that you're going to be able to get this phase thing to funded and it's to contribute towards the bottom line in terms of the number of ounces produced? You talk about, somewhere up to 150,000 ounce producer, right? So that's not insignificant. You're going to take notice of that. But how long is that going to take? Are people going to hang around, or some of your current shareholders going to hang around, quite frankly, because they may feel that they've been this for far too long already.
Yeah, absolutely. Well, listen, and we get it. Some people are saying, well, it's been 2.5 years. We can exit and go roll that into some other opportunity. Most of the capital that came in has always been long-term patient capital, just like ourselves. We are large owners of our company. Management and board own almost 20% of the company. Have never sold a share, and we're not looking to. We're looking to build a company that has, and it does have the opportunity to be a 5 or 10 times valuation from where we are today. We really have that opportunity. So most guys will stick around, I think, because we're on the cusp of showing that BFS, which is maybe 4 months away from now, showing the BFS alongside a strong balance sheet with continued cash flow for the next 2 years while you're building, and a debt component alongside that, which shows that you're fully funded now. I think that'll pique a lot of people's attention, because a lot of people announce a feasibility study and then take 6 months to a year to get the financing lined up. We are going to move into phase 2 as soon as we announce that feasibility study. We probably have already started the expansion, because we already know it's a reality. We already know we have the capital, and it'll come in either tranches or all at once at that point.
Isn't that kind of part of what people are worried about? It's slightly unconventional in the sense that you don't necessarily do things in a linear fashion like most of the market would. Is there anything that worries people?
It obviously hasn't worried the strong institutions that back us, who haven't sold since the last 2.5 years. So they've rode this wave with us, good or bad. For people who are looking for conventional opportunities, we're not the guys, because we do treat this like our own business. We run this like our own business. We're owners. You can go to another guy who owns 0.1% of his company and draws a salary for the next 20 years. He can run his business a lot differently and not take the risk and not be aggressive like we are. And in order to do that, there's obviously a lot of pain sometimes to deal with, but most people will get rewarded for that at some point. And that reward could happen this year, the next weeks, months, quarters, or soon after. And the reward is pretty significant, I would say, from levels where we're starting as a base. So, we are unconventional that way. But that's not, I don't think that's a bad thing.
Okay. Now, Matt Wood involved, I mean, he's got, we talk about Honey Cole, he was in that 18 months, did a kind of flip on that, and made a stack of money for a lot of people. So nothing wrong with that. Does that give some indication of what you're looking to build here? Are you looking to build a significant gold mining business, or get it to a point where you can flip it yourselves?
So I guess, we're owners, but we're also entrepreneurs. So right price, right time. I think that's obviously the opportunity that we can all exit along with our investors who have backed us at the right time and place. And that's certainly not now. But we have the luxury of building a sustainable business that generates cash flow, that at some point, let's just call it 3 years from now, when phase 2 is online and maybe we've discovered another mine, you're not going to be able to use all that cash. Like the capital allocation strategy will be can we invest more, buy more in Mongolia? Okay, no, we're not going to go buy another asset outside of Mongolia. That's not what STEP is. STEP is Mongolia. So then you have an ability to return capital to investors. We're also aligned. So you can create a liquidity event for investors that doesn't have to be a trade sale. However, the chances of a trade sale happening in the next 3 to 5 years are probably significant as we de-risk and grow the resource base and the production profile. But guess what? It's not the end of the world. You can pay either a dividend policy or a special dividend or a certain percentage of free cash flow. There's other ways for everyone to have a significant win in short order, I'd say.
Okay. And so how do you fund this exploration component? I mean, and how much are you going to allocate to it? Because that sometimes gives you the headlines that, again, catch the eye.
Sure. So this is the first year at ATO and Mung. So ATO and Mung is one deposit that we've now added Mung, which means silver Mongolian. That's our 2.45 million ounces resource that we just updated, only down to 400 meters. So this year, we're now going to have targets that we're going to step out 1, 2, and 5 kilometers from this core deposit. First time ever. We never had the time or money. We have our own cash flow to fund this time. And we'll also chase it at depth to see where the underground component could come in, because there are higher grade shoots that we haven't even chased yet. And again, it's been a function of resources and how to allocate them. All of our capital for drilling is being extensional or infill drilling. Today, this year, and in a couple of months when we restart, we'll probably drill between 10 to 20,000 meters at ATO and Mung, which will include some of that at depth, new discovery or extensions, but also for the first time ever, step out, because we're on a trend. There's opportunity for new discoveries on the trend, as well as parallel structures that we've seen already. So the chances are, we can encounter a lot more gold and silver, I guess, or precious metals on this deposit by exploring for real. And that's a budget of I would say circa $3 to $4 million at ATO and Mung. And then we have a second project in the southwest of the country. So there's zero synergies. I mean, it's 1,500 kilometers away, but it's a 14,400 hectare exploration license that has never been drilled. We've had it for 3 years, but again, we didn't have the time or money to focus on it. Now we did groundwork, IP, magnetic soil sampling, and just last fall trenching from surface, what yielded some very positive and I would say encouraging results. 1.5 grams gold, 450 grams silver, 4% copper, I believe, and 3% zinc. I think off the top of the head here, but never been drilled, but drilled around. So that license has been drilled by Erdene, who've had a lot of success to the north and south, adjoining our license. So it's not like they're nearby; they're next door to the south and north, and we're smack in the middle. So we're mobilizing a drill rig as we speak. So we're hoping in the next 2 to 3 weeks we can announce that we've mobilized our first drill rig down there, and we're going to start drilling there. And again, that will be a 10,000 meter program on the back of hopefully some successful exploration in short order. We'll mobilize more if we need, and that should be also a 10 to 20,000 meter program down there, which we think is given what Erdene has accomplished, that could be another mine in the future, part of our pipeline. So very excited to get down there, because now that's in Explorco in itself. You could roll, companies exist just as that license and hoping to hit. So that's very exciting. That's all in one company.
Right. So and I know you've got your cash producing at the moment, but how much cash is sitting in the bank at the moment?
So we have just over 30 million US on the balance sheet today, somewhere between 30 to 35 million US. That'll continue to grow. So I think this year, on a free cash flow basis, let's just assume 50,000 ounces, you should be able to generate about 20 to 25 million US free cash flow. So that's net of exploration spend, right? The exploration would be 5 or 6 million between the two properties, net of sustaining capex, taxes, and all good stuff. We should have additional cash on our balance sheet, which actually will fund the phase 2 expansion.
Okay, so you're comfortable. You can move at your own pace. You're not under any pressure from anywhere else. Okay, fantastic. Why are you listing on the Mongolian Stock Exchange?
Yeah, so for a couple of reasons. Again, we always said we would once we achieve commercial production. We consider ourselves a Mongolian company right from day one, right? So we're a Mongolian company and listed on the TSX. Our CEO is Mongolian, half our board are Mongolian, and 99% of our staff in country are Mongolian. As we saw how important that was last year when we wanted to bring production online. Firstly, all of them have shares in the company now. They are owners of our company. It'd be nice for them to see what they're worth, because they can't actively trade those shares in the current situation through the TSX and opening up accounts. So from that perspective, one is it's nice for them to see what they own and that there's real value there. So that's important. And second is there's demand. It's a lot of demand from within Mongolia to own Mongolian companies or assets. And so this is opening up that channel as well. So I think that'll increase demand and liquidity as well. And it's just a great thing to do.
Okay, interesting. So on the 2.4 million ounce equivalent, I think it's a 2.45 million ounce equivalent number, isn't it? Tell me a little bit about that. Is that an inferred number? Is that including an inferred number as well?
It's a resources number, so you have measured and indicated there.
Right.
It's not. There's no reserve number in there.
Okay.
This is purely just a measured and indicated update with some inferred as well.
Okay, excellent.
Mainly measured and indicated. So you have about 1.6 million, 1.7 million of measured and indicated gold, and another, I think, 20 million plus of silver. What that also includes is lead and zinc. So on two of our deposits, as you move off of the trend, ATO 1 and 2, you encounter some lead and zinc. And that's where our flotation circuit will come online as part of our phase 2 expansion. And so there's going to be value. There's going to be revenue coming from the base metal side as well on a couple of these deposits at some point in time as we expand.
And what's that look like? Is that fairly like homogeneous deposit? In the sense, because I'm trying to work out, because you've gone from 1.2 to 2.45, and wanted, the pre-phase was done on what, the 1.2 or the whole 2.45?
The pre-fees was done in 1.2. The 2.45 didn't exist. So what that included was, so I guess we've had a couple additions here. So Mung, the new Mung discovery, is the first resource ever put on Mung. So when we bought this project, there was never a resource or any technical work completed on the new discovery called Mung. So now we added about 425,000 ounces, give or take, at Mung, down to about 350 meters. So shallow, higher grade, fresh ore deposit. Mung has about 25,000 ounces of oxides from surface down to about 8 meters. So not a meaningful oxide addition, but again, we're not there for the oxide. The oxides will, if we encounter more, great. It maybe gives us a further buffer on a mine life if it takes longer for phase 2, but all that oxide material will go through phase 2 anyways, through the CIL plant. So you don't lose it. It's just, you're gonna get higher recoveries. And that's why we want to bring phase 2 online sooner than later, because the oxides only, right now in the heap leach, you get 70% recoveries on the gold and 40 on the silver. Whereas phase 2, you're going to end up probably getting 85%, probably 90%, hopefully closer to that for both gold and silver. So so that's the one addition. The Mung has now increased our resource base by adding that. And then ATO4. ATO4 is on the same kind of 20-kilometer mineralized trend here with Mung. And ATO 1 and 2 come off of this structure, and that's where you see base metals. So ATO 1 and 2 have base metals. ATO 4 and Mung are just precious metals, and obviously a lot of opportunity to grow at depth and along trend. So ATO 4 is now doubled in size. So again, additional ounces have come where we reinterpreted the geological model that we acquired, and where others said there was a constrained carrot-like pressure pipe, we now have extended it to make it to show a downward plunging component. So that's where really the additional ounces have come from. Doubling the size of ATO4, proving that the original model was wrong, and adding Mung into the mix, which is now part of phase 2 as well.
So when do you know more about the economics around the base metals?
I would say probably the next 4 to 8 weeks. So we've been able to get the, again, COVID plays a part in that BFS as well, because getting samples out of the country when there were no planes coming in or out for months obviously delayed getting the samples out. But we got the samples out just over Christmas into Vancouver or Kamloops, and that met work is being done now. So my guess in the next month or two we'll have some of the recovery numbers on the base metals, and then we're going to have updated recovery numbers on the precious metals. So we started from a base. Like I said, Centerra had already done recovery work at ATO 1, 2, and 4, both in the oxides and the sulfides and the base metals.
Okay, so you think 2021, it's the bit more consistency with the messaging. You will be able to hit the numbers that you talk to the market about, because there's a bit of inconsistency last year for the reasons you've laid out. It's about being cash generative, and then you've got a bunch of deliverables there, which you think people should start taking notice of.
Well, yeah, absolutely. I mean, this year's, I would say, even the word transitional is used a lot, but even more so. Last year, we had to establish ourselves as a producer, and we did. And then regardless of the maybe not hitting the aggressive targets, we still made money, and everyone was happy with that outcome. All of our large investors were more than happy with what we achieved last year. I can tell you that. And even new investors, clearly, we've seen that with the new roster. This year allows us to be more aggressive in terms of growth because we have cash, which we did. Last year, we started with a few million in the bank, barely scraping by and starting production with no room for error. Now that we have production, now we know how to produce, we can generate cash flow. I think we can hit our targets on the oxide mine. Again, that's just a cash machine to get to the bigger beast underneath. And that CIL plant creates a lot of consistency because it's not subject to seasonality with the weather, right? It gets to minus 40 in the winter in Mongolia, so your leaching goes down to almost nil for a couple of months, right? So you get more consistency on that larger production profile as well. Whereas the heap leaches are known, they can have some of that volatility that we can't always control. But yeah, we're still very comfortable, I think, in that 50 to 60, given where we are today. If we think that might slide by a little bit, not the end of the world, but we can update the market more consistently on where we sit instead of waiting, I think. And that's maybe where the messaging was off, where in the summer where we knew the crushing bottleneck was there and we knew that our expats could not get in the country still, then maybe we could have maybe updated the messaging a little bit. We did, with our large investors, but maybe to the market could have done a better job of that. We've learned from our mistakes. We learned from a lot in the last couple of years and even last year. So this year is action packed. You have production. We've shown you we've doubled our resource that can continue to grow. It's still open at depth and on trend, and still the ability to discover new deposits, hopefully on the same footprint. We have exploration start for the first time ever. I mean, drilling start for the first time ever on a larger project in a highly prospective area. So that's something brand new that's coming in the mix. We have a BFS, and we'll have construction start of our phase 2, all within the next kind of 3 to 6 months. So I mean, that's a lot on our plate, but it's exciting, and we now have the strength to do all that and more. And by more, it means hopefully we can maybe acquire an asset or two this year as well in country. We have the advantage of execution. We have the backing of locals, province, and obviously the federal government, being an owner in our company or investor in our company. And unfortunately, we don't have the competition because people can't get in and out of the country as yet. So we have that advantage to assess and negotiate with our local teams on opportunities. So we're hoping we can grow with some bolt-on opportunities, whether they're exploration or advanced or development opportunities in country. So fantastic.
I'm glad you said that about the heap leach, and obviously, Canadian companies suffer from the same thing, in winter too.
Yep.
The ability to recover does dramatically get affected. So I appreciate you saying that. Lots to look forward to this year. I tell you what, stay in touch. Let us know how you get on. I appreciate the honesty and assessment that you've given us today. We'll speak soon, okay?
Yes, thank you very much.